Right now, with bad credit, this is a good opportunity for you to buy your first home. We're going to be talking about building credit, loan programs. We're also going to be talking about equity positions, and we're talking about competition. Might have some bonus stuff in there. Who knows? Maybe we'll talk some Trump. Hey, I'm Huddy. I've been doing mortgage type stuff since 1999, so without aging myself, it was really cool when they invented dirt. All right, let's get into the video. The first thing that we're talking about right now is competition. Short blurb, but you gotta hear me out on this. Right now, there isn't as much competition to buy the home that you want. That's right, it might not seem like there's a million houses on the market, but you should have noticed if you've been looking, more and more homes are popping up or are staying on the market longer. So we're seeing some price adjustments, especially while interest rates are a little bit higher. Now, this is the key. When interest rates drop, let's say they just drop a point, which many people think Trump's gonna drop rates, which he can't just drop rates, so don't worry about that. But that being said, people think that that is what is going to happen. So if rates do drop down 1 percentage point, a million more buyers enter the marketplace. That is a lot of competition. Here's the other thing right now. Because competition is low, typically if you're in a credit challenged world, you're going to be using an FHA loan to buy that house. FHA, it's not a first-time home buyer. It's Federal Housing Administration, so it's for people with beat-up credit. This is important. If I'm selling my house and I get an FHA offer or a conventional offer and everything is the same, I'm taking the conventional offer 9 times out of 10. The reason being is FHA loans typically have a harder appraisal requirement. You're putting less money down. Oftentimes it's down payment assistance, which means your credit scores are a little bit lower. People and listing agents freak out thinking the loan might not close or there's going to be problems with the appraisal. If rates drop and there's a million more people that come in and say 40% of them are conventional, or probably more because that's who's going to be wanting to buy a house with lower rates too, that means if you're an FHA buyer, competition is extremely fierce, making now a better time to try to buy that house because of less competition, especially against conventional offers. All right, so we touched on that. Let's move on to credit because that's what people really want to talk about or really know about is credit scores. So the first couple things, remember, I've been doing this a long time, so I may have looked at a couple, 200,000-300,000 credit reports, maybe more. I don't know, it's been a long time. Oftentimes, people feel like their credit is in the toilet, and then I run a soft credit check, look at their credit, a soft credit pull so we don't ding their credit, and we realize their scores aren't nearly as bad as what they thought. A couple things, or a couple of reasons why is, hey, if you got a credit card payment and it's due on the 5th and you pay it on the 15th, yeah, it's late to them and you pay a late charge. But if you're not going over 30 days, well, you're not late to the credit bureaus with that credit card. The other thing we want to focus on too is medical collections. Oftentimes medical collections, especially now in 2025, if they're under $500, paid or not paid, they're not reporting to your credit. And if they are, we can get them removed, which will help your scores. So a couple things to go along with that is one, you can buy a house with a 580 credit score. Technically, you can do it with a 500 and 10% down. I've tried, doesn't work. It's not that easy to do. But I have gotten several down. I did get one with a 540, several in that 580 to 600 range, several. 3.5% down on top of that, right? So a small down payment, even if your credit score is beat up. Now, here's kind of the cool thing. When your credit is a little bit beat up and you're able to still get into the real estate game and buy that first house, that mortgage payment on your credit really helps build. Having a mortgage on your credit file and making on-time payments can significantly increase your credit score in 6 to 8 months. That's right. A mortgage does more for your credit pretty much than anything, I feel. Credit cards, you can manipulate your scores with it, but keep in mind that having a mortgage, and this will come in play down the road with an example. Oh yeah, you're gonna like it, trust me. We want to really talk about how this credit piece plays into the equity piece and why it gets me excited, especially for my people who think their credit's awful and they can't buy, and then they do buy, and then they buy again. How does that work? Well, I'm going to tell you about Alyssa. She's someone we closed on her loan, I think like, 6-7 months ago. She's a repeat buyer, and I've done a few loans for her. She bought her first house. Her scores were not that great. I think she was under 620 if I remember right. It was like, now it's probably 5 years ago, 6 years ago, right in there, just before the pandemic we closed. So anyway, her credit was a little beat up, but we were able to get her financed and got her into the first house. We used FHA, 3.5% down. Rates were a little bit yucky then, not as bad as they are now, but a little yucky. So kind of the cool thing with Alyssa is she realized some significant home appreciation. So what did that do for her? Well, Alyssa has special needs children, and over those 5 years, they became adults. Well, it turns out she's gonna be their caregiver as long as she can do it. So her needs changed, and she had to sell and buy something that was a little bit more suited for 2 adult children now that had special needs, with her being the caregiver. So she had to sell her house. Well, guess what? Because she'd been paying her mortgage and getting some of her other stuff in line, I think she was like 720, 725, something like that. She sold her house, used all that equity. It was I think, what did they tell me? What did we use? We used like $50,000 of that equity for her down payment on the next house, and we actually used some of the extra money to pay off a bunch of her debt. So not only did Alyssa start this journey with bad credit, but over 5-6 years she built equity, then her needs changed, she sold that house, bought a new house that's bigger, that fits her needs, had a good down payment, so meaning her payment didn't really change that much at all, and guess what? She was also able to pay off all her debt. And that was just by getting in when she could for her kids, trying to create that better life. And man, did she ever pedal down on that stuff. So I say that because Alyssa was hesitant to even try, not thinking it was ever going to be a possibility for her, being a single mom, 2 special needs kids. Right? I mean, I get it. I grew up, my mom's a single mom. Like, I understand this whole thought process, but we just got to try sometimes, all right? So thinking of how she built her credit by paying her mortgage and getting a couple other things organized, then using that equity to buy the next house and her payment not really changing at all, it's a thing of beauty. All right, so I touched at the beginning of the video, and by the way, if you like any of this, thumbs up, subscribe, that kind of cool stuff would be awesome. But competition, guess what? It's coming. Consumer confidence is getting higher and higher day by day. The reason being, Trump. Like him, hate him, it doesn't matter. Whenever a new president takes office, their first year in office is always the best year in real estate. It's that fresh face. People are excited. Doesn't matter if was Biden, that was his best year in real estate, was his first year. Same with Trumpy. That's what history shows us. So I don't care who you voted for. If you got bad credit, you got to watch out, because confidence is coming back and people are going to start buying homes again. So I'm telling you, so you can't say no one ever said anything. I did. Our last thing that we want to talk about today is loan programs. You heard me talk about Alyssa and at the beginning of the video that FHA probably fits more than any other type of loan program, which is true. If you get on the interwebs and you think, hey, I got a 620 and I can do a conventional loan. Yeah, maybe. They look at the whole credit profile, they look at your assets, your reserves. It's a lot of stuff. A credit score doesn't just magically get you or not get you a loan. There's several things that go into it, which is why FHA really makes sense for most people if you're in that 580, I'd say to 680 credit score range. If you're in that range, we're talking FHA, small down payment, you only need 3.5%. There's more assistance available in grants and in down payment assistance loans that you can get in the world of FHA. Not only that, here's the quick one, without being too confusing, there's something called mortgage insurance that you get when you're not putting 20% down. Don't worry, pretty much a lot of people have it. But in the conventional world, it's based on your credit score. So if you got a 620, your mortgage insurance is gonna be extremely high. Versus FHA, where everybody pays the same rate on mortgage insurance. You could have a 580, I could have a 780. We're paying the same cost in mortgage insurance, and it's considerably going to be cheaper, especially if you're 680 and under. Sometimes even if you're a 690 or a 700, sometimes FHA mortgage insurance can be less expensive. Number of factors. The last little thing I got, a little bonus if you will, grants. There are grant programs available. I have one. I can lend in 49 states. New York, not available. Where I have down payment assistance programs, they go down to a 600, where you get your 3.5% down. And that is in those 49 states. Every single one of them, except New York. We have options, and I can lend in all those states, except New York. Got a link in my bio, loanswithhuddy.com. Yeah, cool. Watch the next video. Do something. Buy a house.